Let's begin with the economy, not just in America, but around the world. The two are interconnected. What a wild week it was. The markets in this country yesterday showed no signs of stabilizing, down another 140 points on Friday. That's a 628-point loss for the entire week. All the gains from the spring rally pretty much wiped out. This despite some really positive news on Friday. Employers added 290,000 jobs last month. The biggest gain in nearly 4 years. Big gains in retail, people who sell things, big boost in manufacturing, who make things, even construction up. But unemployment did tick up to 9.9% as more people are now going back into that job market. But over the past 4 months, employers have added more than 500,000 jobs. That's enough for the president to actually express some unburdened optimism.
We now know that the economy has been growing for the better part of a year. And this steady growth is starting to give businesses the confidence to expand and to hire new people.
But there is so much else going on around the world, adding to so much more instability. And joining us now to sort it out on this Saturday morning, Wall Street Journal's chief economics correspondent, Jon Hilsenrath. John, good to see you again. This has become a ritual.
Yeah, thanks for having me.
So what do you
Congratulations, Biana.
Yes, congrats from John to Biana, yes. What do you make of the job numbers?
I would say they were a good start. It was a good job growth, but we have to remember that we lost 8.5 million jobs in this recession, and it would take about 24 months, or actually more than about 2.5 years, just to get back to where we were in December 2007.
I'm getting word, John, that we're having some audio problems with your microphone. Is that true? Should we go over to Biana? No, we go on. I'm sorry, John. Go ahead. We had a little bit of an audio issue. Continue. You were saying that
so I would say it was a good start, but we have a huge hole to climb out of. We lost 8.5 million jobs in the crisis. It's going to take, at least 2.5 years at that pace of April just to get back to where we were in December 2007.
Yeah, a little bit of good news, not enough. So let's talk about, I was on the floor of the exchange yesterday and we were discussing chaos theory. Remember the old, if a butterfly flaps his wings somewhere, does it create a hurricane somewhere else? Who would have thought that, Greeks who don't pay their taxes or their government would affect our 401ks? What do you see as the forecast for what's happening in Europe and how it will affect us here?
Well, it's mostly bad news for us here. As we saw in the stock market this week, we had the biggest stock drop since October 2008. That was the heart of the financial crisis. The worry in the markets is financial contagion spreading over to the U.S. But I should say it's not all bad news. Oil prices are down, so Americans get helped at the pump when Europe suffers. And interest rates have come down a little bit. It's mostly bad for us, but there's a little bit of a muting effect for the American consumer.
And for the average investor out there, somebody who's just trying to grow that little nut, what do you tell them after a week like this?
I think the lesson that we learn in the financial crisis that has to be repeated is every investor, not just big Wall Street banks, has to think about how you're managing the risk in your portfolio. Stocks can go up a lot. They did in the last year, but they can also go down a lot. And you have to know your risk tolerance. If you don't have a lot of tolerance for big drops, you should have cash and bonds in your portfolio. If you can manage volatile weeks like this, then go for it.
Okay, Jon Hilsenrath, as always, insightful. Thank you, sir.
Okay, thanks a lot.